Hi there, my name's Chris Cann with MiningNews.net and Aspermont, and with me I have John Forwood, who is Chief Investment Officer with Lowell Resources Fund. John, thanks for the presentation this morning. I wanted to start off by asking you about the comparison with equities in Canada and Australia, which you touched on in the presentation. Because of the low valuations that we're seeing in other parts of the world, does that make them more attractive for you at the moment compared to local investing?
Yeah, I think so, Chris. We're able to invest in pretty much any market we want, including unlisted stocks. We're definitely looking to increase our exposure and take advantage of the lower valuations that we're seeing on the TSXV in particular. Some of those stocks have been absolutely obliterated in terms of their market value. Someone joked to me this morning that it's easier to win the lottery than raise $1.5 million for a TSXV Mineral Explorer at the moment.
Right, which feels about right.
Yeah, I think that is about right. But it will turn, and it is historically a very volatile market. So when things are bad over there, they're very, very bad. And when things are good, they're fantastic. So it will turn, and maybe we have seen the bottom already. Fingers crossed.
Okay, and one of the fallouts from that has been the different ways that companies are having to raise capital, or some of the different options, particularly when they get to a development stage. We're seeing what we would have once called non-traditional sources of finance, royalties, and obviously more strategic sources as well. Where do you see the financing structures, and what's a good mix, and what's the right mix, and what are the red flags that investors should look out for when people are taking on some of these different opportunities?
Yeah, so the capital stack, it's certainly being sliced in a different way to what it used to be. Traditional banks are not as ready to lend to single project junior resource companies as they perhaps were in the past. And then, as we mentioned, certainly in certain markets, equity is not available either. So companies are having to be innovative. Private debt, streaming, and royalty. I think you do just need to look at the terms of that finance and see what is going to be left for equity holders, and that'll be different in every case. But in some cases, the most precious thing that a company has is its offtake rights.
Okay.
And if they've sold them too cheaply, that is, or too early, then that can make life difficult going downstream.
Okay, and just more generally, John, 2024, how are you seeing it? What do you see as the key drivers for commodity pricing and resources markets generally?
Yeah, look, I think no surprise. I think one of the big drivers is going to be inflation in the US, how it affects how US interest rates move. If there's going to be more cuts rather than less in 2024, that could be really positive for commodities and for the junior resources, more speculative end of junior resources. I think one sort of micro theme, a little battle between the EVs and the non-EVs, and playing that in the commodity space in terms of will lithium bounce back, or will the auto catalysts like palladium and platinum do really well? So that's something that we are watching very closely. Is just a little sub theme.
Okay, and finally, John, it is early doors for Mining News Select Sydney, but what are you hoping to get out of the conference, and what are your thoughts so far?
Oh, look, I really enjoyed, Rick, your interaction with Rick Rule this morning. That was a real highlight. There's a great collection of junior companies here, a number of which we have some exposure to, and catching up with them and getting updates on other opportunities as well is what I'm looking forward to.
Terrific. Thanks very much, John.
Great. Thanks, Chris.